Today we're going to share with you the results of our 2021 Dividend Investment Strategy. As you know, we're planning to achieve FIRE by 2024, and we're funding that journey with dividend-paying stocks. Almost all of it with dividend-paying stocks, figures, hopefully. So stick around and we'll let you know how our entire strategy played out for the year of 2021.
So this video is going to be divided into three parts. Part 1, the companies that pay us dividends in 2021. Part 2, what is the year end? What is the breakdown, in the different asset allocation that we have? And part number 3, we are going to share with you what we are planning to do moving forward in 2022.
We're switching it up. So if you're new here, my name is Christine. And this is Jayon, and we're a Canadian couple living in Toronto, Canada, and we're planning to achieve FIRE in 2024. So we have a couple different ways that we're planning to earn income. One of those ways is dividend-paying stocks.
Exactly, and we consider ourselves hybrid investors, meaning that we do invest in dividend-paying stocks, Canada and US, but not only that, we also invest on ETFs. So let's go through the breakdown of the companies that paid us dividends in December 2021. What is the first one?
The first one is going to be Canadian Utilities. That one falls under the utility sector of our Canadian portfolio. We received $281.91. We own 641 shares, and year to date we have received $1,127.64.
Yep. The second company is Enbridge, which is part of the energy sector. We have received from Enbridge $480. We do have 480 shares, and year to date $1,603.
Yeah. Manulife Financial is the next one on our list. Again, it falls into the financial sector. For the month of December, we received $322.74. We currently own 978 shares, and year to date, Manulife has paid us $1,127.46.
Moving along, the next one is RioCan. RioCan is a REIT in Canada. We did receive $26.88. As of today, we own 336 shares, and year to date, $259.
The next two are ETFs that we hold within our RRSPs. The first one being inside our spousal RRSP. It's ITOT, so that's a total market ETF. We received a distribution in December of $152.14. We currently own 414 units, and we year to date have received right around $522.
The other ETF that you also receive distributions from, it's QQQ. It's the Nasdaq 100 ETF, also in the US. We have received $73.71. As of today, we own 150 shares, and year to date, $205.87. What it's important to mention is we are not doing the conversion between Canadian and US. We are keeping it simple, so as 1-to-1 rate.
The total for December is $1,258.19.
Not bad.
Pretty good. So looking at last year compared to this year, you're going to notice that last year we were all over the place with our dividends. I don't know how many extra stocks we were holding last year compared to this year, but really over the course of 2021, we streamlined our RRSPs. We sold out of every dividend-paying stock within those RRSPs and put all of that money into those two ETFs that we spoke about, QQQ and ITOT. We're receiving small distributions from them, but really what we've gained this year is the capital appreciation.
Yeah. And the fact is because we just don't need the dividends right now. So since we don't need it, would you rather focus on the growth and not necessarily on the dividends? And,
yeah.
Right?
Yeah, because down the road, and we're going to get into this when we talk about our drawdown strategy, but our RRSPs are going to be some of the very last accounts that we access for our income.
Yeah.
And so we really want the money in there to grow as much as possible. We don't need the dividends in there at the moment. We need the dividends into those accounts like the margin and the TFSA, where we're going to be able to access those as income before the RRSP.
That's correct. Another interesting fact is with Manulife. We had the same number of shares compared to the previous quarter. And if you have not seen, I'm going to link up here a playlist where you can see how we have been progressing since 2021. But we do own the same number of shares, which is 978. Now, moving forward, we are going to receive $322.04, which does represent a 15% increase compared to the previous quarter. And we are expecting for 2022, if you don't do anything else with Manulife, just over $1,200.
But we're doing something with Manulife.
Oh, yes, we are.
So like we mentioned before, the QQQ ETF that we hold inside one of the RRSPs is there for growth and not necessarily for the distributions. Just for an example, last time we received distributions from QQQ, we received $62.09. This quarter, we received $73.71, which is an increase of 16%. We never know what the distribution is going to be because it tracks the market. So if the market's doing well, we're going to receive more. If it isn't doing so great, then we're not going to receive as much. So we're really not depending on these ETFs for distributions. They're great because once we reach a certain amount, we can buy a little bit more. But right now, they're strictly for their growth.
Perfect.
So when we look at everything year to date for 2021, we have received in dividend income $16,876.30, which is 42% of the way to our $40,000 a year target for dividend income in order for us to reach FIRE, nearly 50%. So when you break that down, divide that number by 12 months, our average monthly income right now is right around $1,400 a month, which is pretty crazy. Right now, we're withdrawing the dividends and reinvesting them back into the market through the Smith maneuver. But if we needed that income right now, that income would cover our current house and car insurance, property tax, gas bill, hydro bill. Anything else?
Look at the paper.
Maybe our TV subscription for our streaming service. I think that was everything.
Yeah.
Which is a lot.
It is. We don't have to worry about that, and that's actually our goal. So as we wanted to achieve FIRE in 2024, we are going to be traveling the world, and the dividends that we're receiving now, we might be withdrawing that amount, but not coming out of our pocket.
The goal for 2022 is actually to reach $25,000 in dividend income, which is the same goal that we had for 2021. There were certain things that got in the way of that goal, or we had to reorganize some things, but now we have our strategy in place. We know which investments we're in, and now it's full steam ahead. Everything's going to be into these investments, and we have some plans as to how to make that happen.
Yeah, we will make it. If you have not subscribed yet, it might be a good opportunity because every single weekend we do post a new video related to our financial independence journey. Before we wrap up this video, we also want to say thanks to Liquid. Liquid is another YouTuber. If you have not seen Liquid's YouTube channel yet, go and take a look. I'm learning quite a lot with him. He is so smart. He's a great person too, especially if you like options. That's something that we might be trying this year. I don't know if she's gonna allow me or not, but go and check out his channel. So Liquid, thank you very much. We appreciate it and are very grateful.
Yeah, he also has a blog, right?
He also has a blog, yeah, which I'm gonna link in the description down below.
And he's already fired, guys, so he knows what he's talking about.
He does.
Check it. Yeah,
Good for you.
So that's all we have for this week. Our year turned out pretty good. We made quite a bit of money in dividend income. We're quite happy with that. But we're really excited for 2022, and we will hit our goal this year of $25,000.
Spoiler alert.
It's only January 5th, but we're gonna do it.
Yes. Thanks again, and we appreciate for having you along the way in 2021. So if you have not seen our playlist yet, since the beginning of 2021, you can go and take a look, Jan, Feb, March until December. So we're able to achieve that. We've got 1 year sharing our dividend income strategy with you, which is amazing. So thank you.
Take care, guys.
Stay safe. See you in our next video.
Bye.
Bye. Exactly. And what it's important is the exactly. And we're Exactly, and we consider ourselves hybrid investors, meaning that we do. Exactly, when we do. We also want to say. Looking at camera.
Dukin.
Okay, good. Thank
Excellent.
you. Well, things that I don't like is. Oh my goodness.
I don't like the delay.